We have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nest to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met. From permits to paychecks. Ensuring legal, fair, and quota-compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDR.
Half of the KC processing a launch.
At Ines Group Berhad, we have built a strong foundation.
Good evening, investors. Welcome back with me, Madhavi, on KleverStock, serving you the latest updates for the closing bell this evening. Kicking it off with evening updates from our local bourse. Bursa Malaysia closed on a mixed note this Thursday afternoon, with benchmark index booking minor losses as market players fully digested Bank Negara Malaysia's widely anticipated decision to maintain the overnight policy rate at 2.75%. At the 4 p.m. closing bell, the benchmark FBM KLCI trimmed 3.02 points to finish the session at 1,680.59. While blue chips faced fractional selling pressure, the retail and technology sectors found strong pockets of the momentum. The FBMA's index stood out as the major bright spot, jumping 26.17 points to settle at 4,872.94. Heavily supported by the morning's robust industrial sales data out of the electrical and electronics sector. Meanwhile, the broader-based FBM mass index mirrored the main broad's slight softness, dropping a minor 3.26 points to wrap up the day at 12,458.75. Market breadth finished on a knife edge but ultimately favored the bears, with 506 declining counters narrowly pacing 486 gainers, while a substantial 530 equities closed completely unchanged. Trading participation remained relatively steady and selectively across the board. Total market turnover crossed 2.214 billion shares traded, accumulating an aggregate transactional value of 1.575 billion ringgit. Market strategists noted that while Bank Negara's optimistic commentary on domestic growth provided a reliable baseline for the ringgit and small-cap tech equities, persistent geopolitical anxieties in the Middle East kept institutional investors from aggressively bidding up large-cap consumer and heavy industrial blue chips. Now for some local news developments. The Malaysia External Trade Development Corporation, better known as Midday, is officially calling on domestic businesses to secure their slots for the upcoming International Sourcing Programs, or INSP, held in tandem with the 22nd Malaysia International Halal Showcase MIHAS 2026. The massive trade event is scheduled to run from September 23 to 26, 2026 at the Malaysia International Trade and Exhibition Centre of Midday. Building on the incredible momentum on last year's INSP MIHAS 2025, which generated a staggering 3.63 billion ringgit in total sales, global procurement interest has surged significantly. Midday Chief Executive Officer Abu Bakar Yusuf revealed that the trade agency has set a firm conservative baseline export sales target of 2 billion ringgit specifically from the INSP component this year. To achieve this, the agency is actively onboarding roughly 300 highly qualified global buyers, which includes 50 elite premium buyers consisting of top-tier corporate decision makers and international retail conglomerates. To date, the program has already captured commercial interest from more than 500 international buyers spanning 55 separate economies. Interestingly, about 15% of these corporate entities are returning buyers, highlighting deep global trust in Malaysian suppliers. While traditional halal food and beverage products remain a core pillar, this year's edition is seeing an immense wave of corporate interest shifting towards specialized service lines. The matchmaking scope spans everything from Islamic finance, tech logistics and ICT down to specialized pharmaceuticals, cosmetics and palm oil assets. Management emphasized that because of the highly tailored one-on-one business matches, slots are strictly limited. Local companies must act fast. The absolute final cutoff date for local exporters to sign up it's July 31, 2026 via the official INSP MIHAS portal on the Madani digital trade platform. Looking at the bigger picture, Abu Bakar notes that since its inception in the 2004, the INSP mechanism has injected over 20.62 billion ringgit into the local economy, and the overarching MIHAS 2026 umbrella is modeled to generate an impressive 4.50 billion ringgit in its total commercial transactions. Continuing with some economic news, Bank Negara Malaysia has officially announced its interest rates decision following its fourth Monetary Policy Committee meeting of the year. The central bank has decided to maintain the benchmark overnight policy rate perfectly flat at 2.75%. This major decision directly matches the consensus forecast of institutional markets, having been correctly predicted by 24 out of 25 prominent economists recently surveyed by Bloomberg. In its official monetary policy statement issued this afternoon, the central bank declared that at its current level of 2.75%, the monetary policy stance remains entirely appropriate, balanced and fully consistent with long-term price stability and sustainable domestic economic expansion. This hold marks an extended pause for the central bank, which has firmly stood pat at every consecutive review since executing an initial 25 basis point downward adjustment back in July last year. Policymakers note that the underlying economy has proven remarkably robust, recording a strong 5.4% year-on-year GDP expansion during the first 3 years of 2026. This performance comes even as localized geopolitical conflicts continue to roil international markets. Looking ahead to the second quarter, the central bank highlighted that fresh data points directly to highly resilient industrial growth, propelled onward by steady resilient domestic demand alongside a sharper than expected recovery across the electronics export complex. Consequently, Bank Nagara is confidently maintaining its overarching macroeconomic forecast, projecting full-year GDP growth to land securely between 4.0% and 5.0% for 2026. Turning over to inflation dynamics, consumer price pressures remain heavily subdued across the domestic market, with full-year inflation expected to average a benign 1.5% to 2.5%. Bank Nagara emphasized that while core inflation metrics have tracked broadly within initial corporate expectations, consumer continue to be effectively insulated from wider global cost pressures due to the ongoing application of targeted fuel subsidies and strategic price controls on essential consumer items. However, the central bank concluded its statement on a highly cautious note, stating it will remain deeply vigilant and closely weigh incoming risk factors, as prolonged fluid uncertainties out of West Asia still hold the potential to unexpectedly impact the long-term outlook for domestic pricing and supply chain logistics. Moving on to the corporate front. Malaysia's Islamic finance sector has captured a major global milestone in this afternoon. New Pantai Expressway to Riyadh Berhad, a wholly owned subsidiary of construction giants IJM Corporation Berhad, has successfully issued an initial 54 million ringgit substantial linked sukuk. This transaction officially marks the world's first ever sustainability-linked Islamic bond issued specifically for a highway infrastructure project. The newly minted securities were rolled out under the Expressway Unrated Islamic Medium-Term Notes Program, which carries a total nominal value of up to 1.42 billion ringgit. What makes this debt instrument unique is its performance-based financing framework. The capital structure is directly tied to two key performance indicators: meeting rigorous occupational health and safety standards on site and achieving formal green infrastructure certifications. Jointly managed by banking heavyweights Maybank Investment Bank and CIMB Investment Bank, the capital proceeds are explicitly earmarked to finance the construction of the highly anticipated new Pantai Highway extension known as NPE2. The incoming infrastructure project consists of 6.4-kilometer elevated alignment featuring strategically placed directional ramps. The asset functions as a key element under a Kuala Lumpur Traffic Master Plan 2040, forging a direct connection from the existing Pantai Dalam Toll Plaza all the way across the Jalan Istana interchange via Jalan Syed Putra. Once fully operational, the NPE2 will drastically optimize traffic dispersion along the congested and the Pantai Dalam Bangsa Mahmir bottleneck, making it easier for motorists to access the central business district while strengthening critical connectivity between the existing NPE, the Sungai Besi Expressway, and the upcoming Laluan Istana Kiara Expressway. The main design and build contract was formally awarded to IJM Constructions back in November 2025, with engineers targeting final project completion by the end of 2029. IJM Group CEO and Managing Director Dato' Lee Cheung Fai stressed that the structuring the depth around safety and environmental performance embeds measurements, accountability directly into how the group delivers mega projects. Maybank IB Chief Michael O. Lau and CIMB IB CEO Nur Masliza Sliman both reiterated that the landmark transaction beautifully marries Sharia principles with progressive ESG goals, easily satisfying a massive institutional investors' appetite for long-term sustainable value creations. Rounding off today's closing bell with commodities updates. International oil prices are holding relatively steady this Thursday afternoon as energy traders aggressively digest these long-term supply implications of fresh, extensive United States military strikes against the Iranian coastal installations. The intensive bombardment has effectively shattered recent diplomatic progress, throwing a major wrench into high-stakes negotiations aimed at permanently ending the localized war and securing the full, unhindered reopening of the critical Strait of Hormuz. Taking a quick look at the board, Brent crude futures ticked out by a marginal 6 cents or 0.1% to sit at $78.08 a barrel. Meanwhile, US West Texas Intermediate crude futures from functional support rising 13 cents or 0.2% to settle at $73.65 a barrel. Both global benchmarks had already staged a powerful rally during post-settlement trade on Wednesday, jumping by well over $1 immediately after the Pentagon confirmed its forces had initiated the retaliatory air campaign, the latest spasm of military conflict ignited hours after US President Donald Trump explicitly declared that the fragile interim ceasefire agreement with Tehran was officially over. According to a statement issued by U.S. Central Command, American forces successfully struck approximately 90 high-value Iranian military targets. The list of coordinates targeted along Iran's coastline, including active air defense batteries, coastal surveillance hardware, naval assets, and major missile and drone storage repositories. The targeted operation followed an earlier incident on Wednesday where Iran launched direct attacks against UN military installations stationed in Bahrain and Kuwait. Market analysts note that prior to this sudden flare-up, global crude prices had been on a distinct downward trajectory as traders attempted to absorb pent-up Middle Eastern supply unleashed during the brief truce. Energy strategists warn that WTI is highly likely to face extreme short-term volatility in the sessions ahead if these intense US-Iran skirmishes persist or escalate into wider regional confrontations. Crude prices could easily break out past current resistance to test the $80 a barrel threshold. However, if back-channel diplomacy manages to cool regional flashpoints, market focus is expected to slam right back onto fundamental macro pressures, specifically high domestic crude production and a sudden unexpected build in U.S. commercial crude inventories reported by the Energy Conservation Administration. And that's a wrap for Closing Bell Updates with me, Madhavi. Thank you, investors. We shall catch up in the next session soon. Goodbye.